Hey everyone! Today we're diving into something that could completely change your life. How combining a Roth IRA with just 3 ETFs could help you retire a full 10 years earlier than most people. Yes, you heard that right. 10 years! And I'm going to break it down step by step so that even if you've never invested before, by the end of this video, you'll have a clear blueprint to start building real wealth. So here's a question for you. What would you do if you didn't have to work another day by the time you were, say, 55? Would you travel the world, start your own business, or just spend more time with your family? Think about it, and I want you to leave your answer in the comments below. I'm really curious to see what freedom looks like to you.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
Now, before we get into the details, let's talk about why most people struggle with retirement planning. They rely too heavily on employer plans, or they invest without a clear strategy, and then they get frustrated when their money doesn't grow as fast as they hoped. But here's the good news. You don't need to be a finance expert or a Wall Street genius to retire early. You just need a smart system. That system starts with a Roth IRA. If you're not familiar, a Roth IRA is a type of retirement account that allows your investments to grow completely tax-free. That's right, tax-free. You contribute after-tax money today, and when you withdraw in retirement, you don't pay a dime in taxes. That alone is a massive advantage, especially when you combine it with compounding growth over decades. Here's a key question for you. If you could pay taxes now at a known rate instead of potentially much higher rates later, wouldn't you jump at that chance? That's exactly what a Roth IRA allows you to do. And the sooner you start, the more powerful compounding becomes. Now let's add the magic ingredients to our system. 3 carefully chosen ETFs. ETFs, or exchange-traded funds, are essentially baskets of stocks or bonds that you can buy and sell like a stock. They give you instant diversification and are usually very low cost. And I'm going to show you a combination of 3 ETFs that can give you broad market exposure, steady growth, and some safety from market swings. The first ETF we're going to look at is a total stock market ETF. This fund owns a piece of nearly every publicly traded company in the U.S. That means when the U.S. economy grows, this ETF grows. Over time, it has historically returned around 7 to 10% per year, which is huge when compounded over decades. The second ETF is a total international stock ETF. Why international? Because growth isn't limited to just the U.S. By investing globally, you're tapping into some of the fastest growing economies on the planet. It also spreads your risk. If the U.S. market goes down, international markets might be up. Diversification is a simple but powerful way to protect your wealth while still giving it room to grow. And the third ETF is a bond ETF, which is crucial for stability. Stocks can be volatile. They go up and down. But bonds are more predictable. They might not make you rich overnight, but they act like a safety net that cushions your portfolio during market downturns. Think of it as the shock absorber in your financial engine. So here's a step-by-step breakdown of how this works. First, max out your Roth IRA each year. The limit for 2025 is $6,500 if you're under 50, and $7,500 if you're 50 or older. Don't worry if you can't hit the max every year. Even starting small makes a huge difference thanks to compounding. Next, allocate your contributions across the 3 ETFs. A simple and proven strategy is 50% in the total stock market ETF, 30% in the international stock ETF, and 20% in the bond ETF. This gives you growth, global diversification, and stability all at once. Here's a question to think about. What would happen if you invested $500 a month into this combination and never touched it? How much could it grow in 20 or 30 years? Don't guess. Take a moment and type your answer in the comments below. I'd love to see how people visualize the power of compounding. Now, here's where the magic really happens. Let's talk about compounding in real terms. Let's say you start at 25 and you invest $500 every month into your Roth IRA. If your portfolio averages 8% annual growth, which is realistic with this ETF combination, by the time you're 55, you could have over $700,000. And because it's in a Roth, that's all yours, tax-free. That's a huge nest egg for retirement. But wait, how does this help you retire 10 years early? Well, most people rely on Social Security and a 401k alone. They might not even know what they're invested in, and their withdrawals are taxed. By taking control with a Roth IRA and a simple ETF system, you accelerate wealth building. You're not waiting for your employer's plan or guessing which stocks will do well. You have a clear, consistent strategy. Now, here's another question. If you could retire at 55 instead of 65, what would you do differently with your life? Seriously, I want to hear your answers. Drop them in the comments. I read every single one. Your vision might even inspire someone else to take their finances seriously today. And speaking of taking action, if you're enjoying this video and finding it useful, do me a favor. Hit that like button, subscribe, and share this video with your friends or family. The more people understand how to take control of their retirement, the better. And if you want more content like this, commenting is a great way to let me know what topics you're hungry for. Now let's get into a few practical tips for making this system work. First, automate your investments. Set up your Roth IRA so that $500 or whatever amount you can afford goes in automatically every month. Automation removes temptation and ensures consistency. Second, resist the urge to time the market. You'll hear people say, wait for the crash, or buy when it's low. Here's the truth. No one can consistently predict the market. The real advantage comes from steady contributions over time. Every month you invest, you buy at both highs and lows, which averages out to steady growth over the long term. Third, check your portfolio once or twice a year. Rebalancing is simple. If your stock allocation grows faster than bonds, sell a bit of stock and buy bonds to bring it back to your target percentages. This keeps your risk in check while still letting your investments grow. Another point that's often overlooked: keep your emotions in check. Investing can be stressful, especially during downturns. But remember, you're in this for decades. A short-term dip isn't a disaster. It's just a normal part of market cycles. The key is to stick to your plan and keep investing. Here's a really important question for reflection. What's the biggest fear stopping you from starting your Roth IRA today? Is it not knowing enough, not having enough money, or just procrastination? Write your honest answer in the comments. You might just realize that fear is the only thing standing between you and financial freedom. Let's do a quick recap. Step 1. Open a Roth IRA. Step 2. Choose 3 ETFs: total U.S. stock, total international stock, and bonds. Step 3. Automate your contributions and stay consistent. Step 4. Review and rebalance occasionally. And Step 5. Ignore the noise and stay the course. That's it. A simple, repeatable system that could shave a decade off your working life. And just to make it even more motivating, people who start at 25 or 30 have a compounding advantage that's almost impossible to catch up on if you wait until 40 or 50. Time is the real secret weapon. Every year you delay, you're giving up years of tax-free growth. I want you to think deeply about this. If you start today, you could retire earlier, travel more, or spend time doing what you love. But if you wait, you're just prolonging the grind. Which do you choose? Drop your answer in the comments. Don't hold back. Before we wrap up, one final tip. Keep learning. Investing isn't magic. It's math, consistency, and patience. Read a book on investing, watch videos like this, or even join online communities to stay motivated. The more you understand your money, the more power you have over your future. So to summarize in one line, Roth IRA plus 3 ETFs, consistent contributions, patience, and discipline could retire you 10 years earlier than most. That's not hype. That's simple math combined with smart investing. Now, before you go, here's a challenge. Take 5 minutes today to open your Roth IRA or review your current retirement accounts. Set up that automated contribution. You'll thank yourself 10 years from now when your portfolio grows silently while most people are still working. And one more time, if you found this video helpful, hit that like button, subscribe, and share this with someone who could use a jump start on their retirement plan. And seriously, leave your thoughts in the comments. What would early retirement look like for you? I can't wait to read your replies. Remember, the power of compounding is real, and starting early is everything. Don't wait for the perfect time or the perfect market. The best time to start was yesterday. The second best time is now. Thanks for sticking with me through this video. Now it's your turn to take action and take control of your financial future.